Hi, I'm Sam Chandan, Silverstein Chair of the Schack Institute of Real Estate, and I am delighted to be joined by my friend and Chairman of RXR Realty, Scott Rechler. Scott, thank you so much for joining me over Zoom.
Sam, I'm thrilled to be here, and I'm really sorry that I can't be there in person. I was really looking forward to it, but maybe it's a good sign of the progress we're making because I have to resume international travel, so I'm in Asia this week. But next year, I'm definitely going to be there in person.
Fantastic. I'm looking forward to having you back here at the Capital Markets Conference for its 55th year. First and foremost, congratulations. You've just been appointed to the board at the New York Fed. That is a very big deal. The New York Fed obviously plays a critical role in monetary policy in the United States, a more significant role in monetary policy, I should say, than other regional Feds. But it also has this very central role in helping to advance the economy of the region. What are some of your priorities when you're thinking about taking on this role and how you can help through this platform advance New York?
Yeah, and thank you, and I'm excited to become part of the board and get engaged. And I think I've always had a regional lens when I've thought about the New York metro area, and I think that's even more true in a post-COVID world. That for New York to be successful, it's just not New York City, and we're not going to be this superstar city. We're going to be this superstar region, and the connectivity to the region is critical. The other thing that's true with COVID is it was this great accelerant, right? A lot of the trends that we saw historically impacting our community, impacting our economy, accelerated 10 years worth of progress in 10 months. And we're all trying to catch our breath and see what that means. And so I kind of feel like we're going through this great recalibration phase. And what I hope to be able to do is to try to gain the insights as to what needs to be recalibrated, and realize that we can't really, move forward and use the plays of the playbooks of the past, but we need now the playbooks for the post-COVID world in terms of job training, addressing the fact that there's going to be a widening of income inequality. There's more haves and have-nots along the way. The way that people live, work, and operate in urban environments is going to be very different than it ever was before. Our transit system, our infrastructure is going to be going through different challenges as the way that people commute and work remotely starts to adjust to where that is. So I think we're in this moment in time, probably where there's the greatest amount of transformation happening within our economy and our region, probably since post-World War II. And even the demographic change, technological changes, all these changes that are happening and colliding all at one time. And so, I think what's important is to try to really get ahead of those changes and be intentional about putting policies in place and approaching, from a business perspective, ways that recognize those trends are happening and try to address the challenges that are the offshoots and embrace the new momentum that comes out of that.
Yeah, whenever I hear the word recalibrate now, I think of you immediately because Recalibrate Reality, your program, has had a big impact on the way that a lot of our students and others are sort of thinking about the recovery. For folks attending the conference, there's a link to it in the virtual tote bag that we're sending out. So when we're thinking about that recalibration, though, there's no escaping that a lot of the thinking around how the world is changing. A lot of the coverage around things like migration patterns, the relative competitiveness from a tax perspective of Northeast cities versus the Sun Belt, at least in the initial analysis, comes across as unfavorable to places like New York and Chicago and Philadelphia and Boston. How are you framing that? How are you thinking about New York and its competitive position, on the other side of the pandemic?
Yeah, well, so listen, New York has been through multiple crises, and many of us have lived through from 9/11 and on, where we've had our obituary written and we've taken a step back, reinvented ourselves, and came back stronger on the other side. This clearly was hard, but the common thread to New York's success for the last number of decades it is the magnet for talent, right? It's a magnet for the best and brightest, most creative, most diverse people from around the world want to come and settle in New York. And when the talent's here, that attracts the companies, particularly as we're in this knowledge-based economy. What fuels these companies' growth is having the people that have the skill sets and the diverse views and diverse skills to be able to create new products and new innovations along the way. And New York has had that. And I think what gives me the greatest confidence now is the talent's already come back to New York, right? If you look what's happened over this year, the residential market, the multifamily, the for sale housing have had record levels of rental, record levels of for sale housing. So the people are living here. The people are back in New York right now, and that was probably the biggest risk when we saw that flight during the heart of the pandemic. But that's reversed itself. It may not be the same people, right? Some people may have relocated to some of the places that you noted that with lower taxes, et cetera, but it's been backfilled along the way. I think what the trick is, though, for a city like New York, is we still need to adjust for the fact that there is going to be now, more of a virtual setting, right? That we're having this conversation, right? The genie is out of the bottle, and people can work virtually, which means they may not commute into the city every day as they have in the past. And we need to find a way to bring that back more regularly, because it's not just about the bringing people back to the office buildings. It's about supporting our local communities. It's an ecosystem, right? Our small businesses, our restaurants, our transit systems. It can't function if we don't have people back here. And in some cases, it may mean that we have to reimagine what our neighborhoods look like we did post 9/11 in Lower Manhattan. And we may need to be thinking about taking buildings in Midtown and converting them to other uses like residential. So we have, the center being more of a 24/7 live, work, play environment, that the businesses are not supported just by big business, but also by people that live in those communities and create that vibrancy 7 days a week. So that's my point about intentionality. We have to work towards these things. We're getting to this new normal, right? We're now over 87% vaccinated for the adults in New York. The restaurants are filled, the parks are filled, Broadway is open, the lights are bright, right? That energy's back, but there's a whole series of challenges that we have to actually deal with and we can't ignore. And unfortunately, those challenges are hurting more of the underserved communities that already had been hurt by COVID, right? So we have to be thoughtful about how we're going to deal with that. Different levels of job training, different uses, helping small businesses get through the bureaucracy and reopen again, and be able to reimagine New York, in this new setting, in this post-COVID world for the new normal.
Yeah, absolutely. I know, one of the things that you and I and Richard Florida have discussed is, how do we approach creatively questions around, housing affordability, not necessarily capital A affordability, but affordability in a way that allows for, occupational diversity within the city, that allows people to live proximate to transportation hubs, to access good quality schools and other parks, other critical amenities, sort of in a post-COVID environment. But I think for me, what this comes down to is a key point that you raised. It's about where people want to be. And that's especially true in a tight labor market. Firms are having to accommodate how people are thinking about where they want to live, how they want to work, how they want to engage with one another. And if what you're seeing is that people want to be in New York, then that bodes very, very well for the outcomes or an outlook for the city. I'll ask one quick question that's a little bit more specific on the transportation front, because you have been so involved and have such a unique perspective on sort of the transportation infrastructure and the kinds of investments that we're making. One is, with the infrastructure bill making its way along, what should some of our priorities be to enhance the vibrancy and connectivity within the New York region? But also, do we need to think a little bit differently about the transportation infrastructure if on any given day, only 4 out of every 5 people that we thought would be commuting to work are actually commuting to work?
Yeah, no, it's a good question. So I think, one thing that's clear, by the way, coming out of COVID, right, is that transportation nodes are really going to be important magnets for where commerce is going to want to locate around, right? If people are going to be coming in, they're going to want to be able to come in on a one-stop area, whether it's around Grand Central or Penn Station or down at the World Trade Center or being around some of the major subway nodes that are out there are going to be critical. And the other thing I'll say is that New York has invested tremendous amount in its infrastructure so far. And, as we've all sort of been hibernating through COVID, you've had things like the Moynihan train hall open up, and you have had the new terminal at LaGuardia Airport open up. And so there's a lot in New York that's come to life, and a lot more that can. I think the good news with the new infrastructure bill, which is I think $1.2 trillion or so, when you cut through it, there's about 170 billion of it that's targeted for New York, and that could be things like our Gateway Tunnel, which is a 100-year-old tunnel under the Hudson that's been in a state of disrepair, and sort of a quagmire how we're ever going to ultimately get it rebuilt, because the price tag was anywhere from 10 to 15 billion dollars or more, depending on who you're talking to. There's money set aside to get that done, which is a critical piece of infrastructure for the New York region, and frankly for the whole Northeast United States. And then I think our subway systems, right, and our transit systems and our commuter rail, they're going to need money not only to bring themselves to the 21st century, but as you noted, I think reimagine their schedules, reset how they're going to operate in a way that they can provide the highest level of service to our customers, but under a different new approach. And some of this could be good, right? Because remember, pre-COVID, we had capacity issues, right? We had too many people on the subways, we had too many people in the transit all at the same time. If we could be smart about this and have commuters come in at different times of the day or different days of the week, and still get that level of activity, there's ways that we can make living in Manhattan or living in the New York metro area more sustainable. Like affordability is always a big issue. So if you can now move a little bit further outside of the center of Manhattan because you're coming in 3 or 4 days a week versus 5 days a week, all of a sudden you have more affordability, a better quality of life. So I think we got to think in that context as we move forward. But obviously, infrastructure is key. Also, broadband infrastructure has proven to be more important than ever before in terms of equity. And when people have to think about that for schooling and work, is going to be a key factor as well.
Yeah, the digital divide has never been more severe and more impactful than it has over the pandemic. I think those of us who were able to pack up our laptops in March of 2020, go home, plug back in, get online, and become productive again, we're in a very different position from folks, as you pointed out, young people in school, in colleges and universities who may not have had the equipment, the broadband access, the familiarity with the technologies to be productive again. They were at an extraordinary, and in many cases remain at today an extraordinary disadvantage as compared to those who have had access to the technologies. One last question before we turn to Midtown East, because you'll be followed by Mark Holliday, and we'll chat a little bit about One Vanderbilt. I was looking at some pictures from the observatory. I mean, if you don't know why you want to live in New York, visit the observatory at One Vanderbilt. Exactly. Because it's just being there is all the convincing that you'll need. You mentioned the Gateway Tunnel, and what it begs that I ask is that, so we're in a position where over the next several years, potentially the next decade, we have access to the financial resources to make significant and badly needed infrastructure investment. Do we have the political alignment that we need to make those necessary investments?
Yeah, I mean, I would say, and it's a good question, because there's been moments in New York's history where, and I've lived through a lot of them, where the political dysfunctionality has paralyzed us to move forward with projects. I would say we're in this unique period of time throughout the New York region that there feels to be a real alignment of interest and a collaborative approach on projects like infrastructure. What I would argue, though, that I think is important for us all to focus on is that it's not only important that we're actually reinvesting in our infrastructure, but that we reinvent how we invest in our infrastructure. Because when you think about New York and the New York region, we have a reputation and a reality for being the most costly infrastructure projects in the world, and a reputation for always being over budget and delayed in delivering that infrastructure. And if we're going to be taking the public's funding to help rebuild our infrastructure so we compete in the 21st century, there's a responsibility and accountability from this public stakeholders to actually do that in a way that the money is spent responsibly, and that we as the public can see those results. We can't have another situation like, for example, the Second Avenue subway that took decades over and was hundreds of millions or billions of dollars over budget, or the Eastside Access tunnel, which was again billions of dollars over budget and decades delayed in the process. Otherwise, we're going to lose the ability for people to have confidence in investing in infrastructure in the future. So I think that's critical. And one more thing I just want to hit before we jump to Grand Central, because I think it's an important point. We're through this public health crisis. The pandemic's over, right? We are now in New York. We're 87% vaccinated. The level of people that actually have positive cases that get hospitalized or seriously ill is less than the normal flu. So just to put in perspective, I think the big challenge we have as a community right now is a psychological challenge. The psychological challenge because we all had to revert back during the heat of the pandemic, but we need the same message and that we got so strongly during the heat of the pandemic to actually get people to stay home and flatten the curve, to reverse that psychology. I mean, I was over in Europe, in Copenhagen and other parts of Europe, and they basically have announced it's over, the pandemic's over. So the office buildings are filled, the restaurants are filled, the meeting halls are filled, the subways are filled, and they said, if something changes, we'll let you know. And so I think part of the next step for leadership here is we need them to help us, and we all need, as business leaders, to change the psychology and say, okay, it's time, it's done, right? It's time to move forward now, and that there's consequences for not doing that, right? There's consequences of the small businesses, there's consequences of not having as many kids in the school system as they should be right now, the social interaction that the kids at NYU and grad school at NYU, the young professionals that work in offices that aren't interacting and having the mentorship that they normally would have in these situations. And so we need to weigh those consequences against the fact that we're now dealing with something that has less risk than the normal flu in a normal flu season. And so I think it's an important message that we all have to get out there. We've been trying to trumpet it ourselves, but if anyone's listening, I encourage you to trumpet it also.
I think when you're talking, people are definitely listening. But we emphasize this very, very same thing for our students. We are a mentorship economy, and in real estate, we are an apprenticeship culture. The ability to build meaningful relationships with other people is absolutely central to your ability to contribute in our industry and to advance your own career. So if your company gives you the option to stay home or go in, and you can go in safely, go in. You owe it to yourself, and you owe it to everyone else that you work with. If we had more time, I would debate with you a little bit on sort of our interpretation of the pandemic and sort of what it means for us as we move to a phase where perhaps it's better characterized as endemic. And I'm encouraged by New York City and others making investments in preparedness for future public health shocks. It's difficult for us to sort of fully foresee how COVID-19 or any other potential public health challenge may constrain us in the future. But I do feel confident that on the other side of this, we are making investments to ensure that we're better prepared than we have been historically, which is a very, very positive move.
And listen, just to hit this, because I think it's an important point, right? I think right now it's a pandemic for the unvaccinated, right? So we need people to get vaccinated. We mandated it on all of our construction sites, on all of our buildings, for all of our vendors. And we went from 40% on our construction site to 100% on our construction site. So you can get it done if we put our mind to getting it done. But you also raised a good point, which I think is important. Just like after 9/11, we always now knew we had to coexist with the threat of terrorism. And we put in infrastructure, we put in protocols, we continue to invest in early detection systems and positioned ourselves to actually be able to coexist with this new threat that didn't exist to the degree it did post 9/11. It's the same parallel as it relates to the COVID-19. There'll be a COVID-25. There's going to be something else along the way. We've hopefully now learned enough, both from a science and medical perspective, as well as an operational and response perspective, that we're going to be able to deal with it in a much more effective and one that results in much less loss of life and livelihood.
Yeah. So talk to me about Grand Central. So all through the pandemic, I think we saw, with perhaps the exception of that initial phase where we all did go home and people were scared. Occupancy, rents at One Vanderbilt, the asset has performed extraordinarily well. What's behind it?
Yeah, well, first, you made the point. I had a tour with Mark, and again, I wish I would be there so I could give him the accolades in person. Incredible building. The observation deck is incredible, but what's really incredible is the whole building's incredible, right? It's an ecosystem, it's a community, and it's frankly a model of where office buildings of the future are going, which is it's not just a place to work, it's a place to congregate. It's a place to come. You walk in, you're walking up to it, you start feeling energized. You walk in, you feel energized. You have the amenities that bring people together, the cafes, the meeting rooms, the views, this is what it's all about. And why is that important? Because if you think about in a post-pandemic world and the way technology now has changed, the parallel that's best to think about is e-commerce. When e-commerce took place, we could all buy things online, whether that was on Amazon or whatever, and we stopped going to malls unless going to that mall was more about the experience and the outing. The same is true now for the workplace. It's the workplace is going to be something that if you could do it at home, you would, unless going to the workplace is energizing, is engaging. It's being part of a community, about being a part of an experience. It's easy to get to, right? And so when you think about Grand Central and One Vanderbilt and the new buildings that are being built, and JP Morgan's being built in Grand Central, and what we're going to build in Grand Central, and even what's been built in Hudson Yards, right, is that these are the ecosystems that are being built that congregate people, that create energy, that people come there, and sort of there's this merger of home and work life, and that you're curating activities. And where Mark has taken it to another step with the observation deck is truly you're activating the building, right? You're either activating it through programming or amenities. In his case, in extraordinary experiences that people would go to and outsiders would go to. But that's really, what the future is, and why Grand Central is so, primed for this. It speaks well again for public policy, right? Because if it wasn't for the Eastside rezoning policies that started under Bloomberg and de Blasio carried through, you wouldn't have the buildings like JP Morgan's new headquarters being rebuilt, or you wouldn't have One Vanderbilt, or you wouldn't have what we're going to be building across where the Hyatt Hotel is in the future, and taking down old 20th century buildings that are effectively competitively obsolete, even more now than they ever were, and maybe not even rentable, and creating these new buildings. But not only creating the new buildings, as part of that, everyone's investing in infrastructure. So I believe SL Green put $250 million into expanding the subway and subway access. In our project, we're putting $400 million in expanding Grand Central, a whole new Grand Central Hall, and access to Long Island Railroad and subway access right underneath our building. JP Morgan did something similar. So it is a great model of public-private partnerships by using policies and to incentivize private capital to go position parts of our community for long-term growth where it's supposed to happen.
Yeah. So we've established that One Vanderbilt's doing well, that it's got sort of it's got a design and sensibility that is just so well attuned to what people are looking for in space and how they're going to use it. But it was designed, that this vision was sort of, came to life before the pandemic. Post-pandemic, anything that, if you had the sort of the opportunity that you might have tinkered with a little bit?
Well, you can ask Mark that question, okay, since I didn't have the design on it. But what I will say is, I think, as I said earlier, a lot of the trends that we're seeing post-pandemic were things that were happening before. The pandemic accelerated them, right?
So this is just an example of great foresight. Now, talk to me about Grand Central as a place. Obviously, this incredible transportation hub, so much linkage to the for the region right there. Has the importance of place been enhanced or diminished in this environment?
No, I think it's clearly been enhanced. And again, for those who haven't really appreciated or don't know about it, right? I mentioned briefly Eastside Access, which is effectively a whole nother Grand Central terminal underneath the existing Grand Central terminal. 8 new tracks that enable people on Long Island Railroad to not have to go all the way to the west side at Penn Station, but actually can go and land in Grand Central directly. So it's expanding the capacity of people to commute from Long Island directly into Midtown on the east side versus going all the way to the west side, and create capacity at both train centers for doing that. And so it's not only has the great grandeur and these investments that are put in place, but that connectivity, the convenience of that connectivity, and then the walkability around it all. And the key piece of the planning piece of this from the regional standpoint and from the Grand Central was it basically, with each building that's being rebuilt, we're getting better infrastructure, we're getting better streetscapes, we're getting better experiences, we're getting better restaurants, better lifestyle, and each of these things becomes self-reinforcing to make that whole Grand Central community more effective and more magnetic for people who want to be there. And that's, and again, that's similar to what, they've worked on doing at Hudson Yards, similar to what they've worked on doing in Lower Manhattan. Here in Grand Central, it's not new, right, which it was in Lower Manhattan and Hudson Yards. We're dealing with all the legacy assets, which brings a different degree of challenges and a different degree of character and location than those others might have.
Yeah. So talk to me about 175. What's on tap for the next big thing?
Well, hopefully we'll have the approvals in place for this project, which, for those who don't know, it's basically tearing down the Hyatt Hotel, which is adjacent to Grand Central. We're doing this in partnership with TF Cornerstone, and we have air rights that we own above Grand Central that would be relocated there, as well as we're getting additional air rights for the transit improvements that we'd be making, and we'd be building the largest commercial building in the Western Hemisphere, between 2.5 and 3 million feet. It would have an office building on the base and a hotel at the top. And it could be an extraordinary building like One Vanderbilt's an extraordinary building with a mix of floor plates, with a mix of amenities, a lot of public spaces for pedestrians, a real upgrade of the transit systems, and something that, which is interesting to your point about what's the pandemic, on One Vanderbilt gave us a lot of confidence to continue to invest in this project, big dollars through the pandemic, because we saw it went from 60% leased to over 90% leased and achieved rents that were the highest rents in the marketplace. And I think that's, a demonstration that there's a flight to quality, that the companies that want to be here, want the best buildings that can bring their employees back so they can have the best experiences. And so already ourselves at 175 Park, we're talking to anchor tenants who aren't even back in their offices in New York right now, who are thinking about in 2027, 2028, where do they want to be and what type of building do they want to be in? And 175 is an example of a building that they would want to be in.
Yeah, I know we only have a couple of minutes left. Let me ask you then about sort of the other side of this. We've got these incredibly attractive new buildings. What happens to the B and the C asset that it was functionally obsolete, or it's just not the right asset at the right time?
Yeah, so it's a good question, and as I said, COVID was a great accelerant for things on the positive. It also accelerated some challenges we've had, right? And there's been a while where there's been a divergence of what companies are willing to pay for Class A buildings, and they're willing to pay for B and C buildings. I think that this has accelerated the obsolescence of these buildings, and that we're going to need to be creative on repurposing these buildings, and not just office buildings. It's Class B malls, it's Class B hotels. And I'm hopeful that we use policy to actually help accelerate that process, right? That the city and the state put in policies and incentives to encourage the transition of these assets to a higher and better use, so that we don't wait 10 years, 15 years for it to happen naturally in the marketplace, because that would be devastating to the community. Because you think about it, you have large parts of city blocks that may be obsolete, may be empty. And what's that lead to? It leads to not energy, not tax revenue, but crime and flagrancy and a lack of positive activity. We're working similarly on malls. We have 3 malls that we're working on right now. And the municipalities are all in favor of helping us transition these malls into other and higher and best uses, because they want this to be a positive for the community, not these blighted areas. So this is where we need to be intentional again, and we got to be focused on recognizing the challenge and forcing the solution to happen quicker than it would happen if we just waited for the market to do it itself.
Yeah, I know you've got to catch a flight. We're really going to miss you at the conference tomorrow. Last comment, any advice, any thoughts that you'd like to share with the students?
Yeah, no, I would echo your point, which is if you're not in the office, come back to the office, support your local community. be engaged, and this is your moment, right? I mean, this is, when you're going through periods of change like we're going through, people who've been in the business like myself or Mark or Sam, we all have a preconceived notion of what is. You're coming in with fresh eyes as to what it really is. Where ours is the past, yours is the future. And so we're a little bit of the prisoner of the past, where you can be the pioneer of the future. So lean into the fact that you're not burdened by that legacy perception, and be outspoken, and let people benefit from your clear insights.
And it's always awesome talking to you. Thank you so much, and have a safe trip.
Good luck with the rest of the conference, Sam. Thank you for having me. I appreciate it. Mark, good luck.